Okay, again, I don't know what happened to my internet. It's almost like I was talking about estate planning and wheels and who's going to take care of kids. And then all of a sudden, it's almost like Google went into like, we got to shut him down. We can't talk about this because you can't. The government doesn't want you to transfer assets. They want to take your money. I don't know. Who knows what it's about? Hey, I do apologize. I am behind on posting the last couple of recordings. And yesterday, apparently, I just let it record after I left. So God only knows what's at the end of that one. So I got to make sure I take that out. Y'all might have heard me in the bathroom downstairs doing God knows what. So it's just one thing after another. I don't know why I can't close my darn spreadsheets. Anyway, we'll get started. All right, where we go? Let's go to the charts first, like we always do. Now, because NQ is all of a sudden important to us, right? As well as ES, you know, you can do NQ. This is the way I used to day trade. I told you I was horrible at it, but you know, my day trading, this was my chart, right? So I would go AD, ES, then I would go here to look at NQ, and then I'd look at volume. Then I'd make a trade on NQ, thinking that NQ was going to follow the ES. So that's how I go. I go, okay, what's AD doing? Okay, AD is kind of flat, right? So this is going down. This is going down. And then what's volume doing? And then that's how I would do it. Now, of course, I remember me telling you I was horrible at it. So I probably shouldn't even talk about it. Let's look at our first 15 minutes today. First, AD is 312. So AD is very, very strong today. And the market is not as strong as yesterday when we had a lower AD, if memory serves me correct. But we are at 0.37 here. Interestingly enough, the NASDAQ is not keeping up. We're down just a bit here, right, on the NASDAQ. But, you know, it's not a big down day. And the market's up again, yet again. All right, so what does this mean? So AD, pretty strong. Market, you know, it's okay strong. It's above the overnight high. First 15 minutes was only 5 points today. Look at that, 45.14 to 45.19, so 5 points wide. So see what's down here. Here's the overnight low. Here's one of our pivot points, another pivot point. So we got stuff down below, and we got stuff. Anything up above? No, there's no stuff up above. Now, if you're ever on Thinkorswim and you see this flashing over here, like every now and then it's flashing, all you got to do is change your time interval and then change it back, and then it'll stop doing that flashing stuff. I don't know why it does that. It's just crazy. So I went from 2 minutes to a 1 minute chart. I always like watching these on 2 minutes on my little daily stuff. Now go back to 2 minutes. Oh man, I don't have it saved. Let's see, 2 minutes. 2 minutes, baby. There you go. And that should stop that stupid flashing. All right, so, you know, market's doing what the market's doing. The NASDAQ is a little underperforming. That's fine. So now what do we do from here? We go to volume profile. That's our second step, right? We look at the market first, see what we think. And I'll be darned, let's look at the volume profile with ES. So it's doing kind of what we thought it would do, right? We said yesterday, well, here we are in the fair value zone. We probably expect this thing, or was this yesterday? Yeah, that was Tuesday. So here we were yesterday, and we said, yeah, we'll probably hover around here, may go to the top. If we don't go to the top, we could go down here. If we don't go down here, we might can go all the way down here. So if we're going to have a little bit of a down day, wouldn't surprise us all to see some action around the 43, 46, around this 50% line, which is also the point of control for the last 10 days. This is where the most volume is traded. You see we got a lot of gaps in here that we could fill. Sometimes those gaps fill. If price goes down to here, though, I would expect that the point of control would shift upward, and the point of control would shift upward to here. Everybody see that this amount of volume, right? This is volume traded is almost the same as this volume. So if price were to come back into this area and trade a lot around here, this would overtake this as the point of control. But right now, what do we say? Is price fairly priced? Is it oversold or overbought? It is fairly priced. This is a fair value zone. This is oversold. This is overbought. So looks good. Let's go and look at NQ now. If we've drawn the chart on our NQ, or big green monster, let's see what it looks like. And it should look very similar to what we have in the E-minis. Gosh, everything's so slow today. All right, here we go. So we're above the 20, the 50, and the 200-point moving average. Its point of control, if we were going to see a little bit of correction, is less than its 50-point line, but it's kind of similar, right? Kind of similar. Now notice here, though, we do not have a corresponding volume that could take out this volume without a ton of volume being traded. So this, the NQ, is much more susceptible to a bigger correction than is the E-minis, in my opinion. Of course, I know nothing. But you will see that this now is fairly priced. We're fairly priced. Wouldn't expect, if we're going to go upward, you know, we probably see a little bit of consolidation around the 15,595 area as we are going toward 15,600. Look at that. That's where we're going. All right, but if we do have a little correction, probably back down to the 14,700 level. So those are the levels that we watch. Do we know anything? No. Can the market do what the market wants to? Yes. Does the market have to abide by our little lines that we draw? No. But it's amazing how often these little lines are correct, right? Look, here, showed a little bit of consolidation here, showed a little bit of consolidation here, right? A little consolidation along this line. It ignored this one at all. And now we're into a fair value zone. Okay, so what do we do now? Now we try to get our screwdriver to working. Doesn't look like it's working at all, does it? Let me close it back. Let me back up. Don't see. Just when I think I got everything worked out. Screwdriver. Okay. So you see what the screwdriver's been doing. Yesterday we were at what, 41? So we're a little bit out of the ordinary with screwdriver. The green and red lines normally where the average, the mean is. And so we're a little outside of it, which would indicate on the E-minis and the SPX that we'll probably see a little bit of sideways to upward motion in the market, which is kind of inverse to the skew, right? Let's see if we can actually see what today's skew is. Here we go. So, oh, got trades filling. All right, so we've got 30 days. Let's see what our 520 is trading for. So this is looking at 20-point wide spread. So it's at 41 the same, right? It's still 41. 41, hanging in there. So we said yesterday we expect to be neutral to slightly bullish in the market. So again, it's 41. So we will record that 10, 20, 21. So why don't we do this? Let's put the formula in there. We will go equals if B48 is blank, then this will be blank. Otherwise, 25. There we go. So then we'll go over here and we'll go equals if B48 equals blank, then blank, otherwise 35. Okay. Now we got little formulas in there, and you can, do this and let's see, you can run that little formula down. Matt showed me how to do that, so hopefully the formula's here now. Let's see. Crap, no. Let's see, Matt. Hit it like that. Hit it like that to copy it downward. Dang it, it ain't gonna do it for some reason. Anyway, just like you do it too. You can do that, then you go grab that, go shoo, copy it down right there. Now the formula's down there. So what it should do now, and let me save this and I'll share this with you guys today because this is pretty much up to date. And I like this little chart, right? So the little chart will keep the average, average. So if it goes above this, the market's bullish. If it goes below this, we're bearish. Notice we're not, the only bearish signal we got was here. So right now we are neutral to bullish on the market. And that's why I talked with y'all and said, hey, should we flip this around and inverse it? Would it make more sense to you about the skew? I don't know. I'm used to looking at it like this, but see, here's the reversion looks like it'd be down, right? which means that the market should be going upward if we're going to stay in that 25 to 35 zone. So, we are neutral to bullish on the SPX. That's what this is all this is saying. Now, keep in mind, we don't know anything. This could 41 to 96 again, but 96, you're pretty much shooting fish in the water. When this goes 96, you need to be all bullish on things that are related to the S&P 500, right? We even said that when we were at 70. When we were at 70, this was shooting fish in a bucket, right? All you got to do is be bullish. So when these things get to extremes, this is when this is really, really powerful. So you haven't seen an extreme to this side, right? You haven't seen this be 15, but when this is 15, you need to be bearish, very bearish. So what we do is we use the screwdriver and we use the big green monster. And if you don't know how to do this, just do a search for big green monster, Sweet Bobby, and I'll show you how to draw this in one of our YouTube channels, right? That tells us overbought and oversold conditions. All right, so now that we know all about what we think the market's going to do, we can actually look at our account and see what's happening. All right, so look at your deltas. Make sure they're SPY weighted so you can compare apples to apples. So I am positive 20 deltas. I have beautiful theta, and I have beautiful Vega, right? And I'm down $109 today. Oh, behave. All right, so that looks, kind of bad, right? But nothing too bad. So, what's my assumption on the market? It's bullish. It's a little bit bullish. So this is fine. And my theta's good and my Vega's good. So, what do you want to do? So my TQQs are kicking it again today, right? So these things are up $1,800, even though this is flat. And then you expect your Black Swan hedge to be down a little bit. Your macros are doing what your macros are doing. You kind of look and see what everything's adding here. So my deltas, my TQs are definitely positive deltas. I'm getting some positive deltas from my macros. My Black Swan hedge is giving me negative deltas. My calendar trades in the SPY are giving me negative deltas. My VIX hedge is giving me negative deltas, and my SPX calendar is giving me negative deltas as well. And I've got very nice positive theta. So the wonderful thing is about running this particular little strategy that we're running now is that you're not going to have a delta burn, right? We're not going to have a delta, negative delta, which is eating into our profits every day. But you do need to watch this, because if you have too many negative deltas, you're not getting the positive benefit of your TQs, right? So you got to kind of watch that. What is my assumption for tomorrow? My assumption for tomorrow is slightly looking at the market is we're business as usual. So we're neutral to slightly bullish. And my deltas reflect my market assumption. So, make a market assumption and go with it. Now, the cool thing is that you don't have to do, if we're going to run this TQ strategy, you don't have to do any of this other stuff if you don't want to. Just run it. All right? Go 50-50 TQQ and 50% cash. Let it run. I've done it for 3 days, and my 243 shares are up $2,014. Am I happy with that? Oh, heck to the yes. That's in 3 days. No, 4 days. I did this on Friday. I'm up $2,019 on that. Am I happy? Oh, heck to the yes. Now, then what I did is I sold some calls. So this is a covered call, right? So let's say that now I'm bearish on TQs, which I'm not at the moment. But let's say if I was. Well, I've got 2 in the money calls. These are covered calls that I've sold, right? I'm down $220 on that, but you don't care about that. It's up $70 today. My actual shares are up $29. So you don't necessarily care about that because you still got positive deltas in your TQs, right? So let's go and see what those look like. Those little bitty options that I got there. I say, here we go. TQs. All right, so here we go. I sold a weekly calls against my 243 shares. So even if I'm called away, I still have 43 shares left, right? And look, I am on the dance floor. I'm on the dance floor right here. So these expire tomorrow, right? These expire tomorrow, and we are still down a little bit on. So what could you do today? I mean, theoretically, if I wanted to, I could roll these today, right? Create a rolling order. And I could roll them out another week. So go to October the 29th. And if I go to the same strike, look at that, y'all. I'm getting $188 to roll that. Well, what if you want to roll it to a little bit more safety, right? So say you want to roll it up a little bit to 143, you're still getting $133. So the only thing I would do is I would say, if I want to roll these, I just want to do it where I can get a credit, roll it to a little bit more safety. So maybe that's it, give me $83 more, bring it into the empire here. Now, let's say that all of a sudden I'm looking at my charts, I'm looking at my thing, and I am real bearish all of a sudden. Let's say that, I see this is overbought and it looks like the skew driver is going to tell us we're going to get a big drop. So I go, man, I don't know what to do. Well, here's what you do. You let these things get called away, right? If this ends up being in the money, then my options will get called away. So what would that do? That would take away 200 of my 243 shares. I'll still be left with 43 shares. Still be left with 43 shares. Now, how cool is this? So then what would I do? Okay, so I would go to my spreadsheet. Let's see if we can find the Empire spreadsheet. Bum, 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 bum. The TQQQ AIM Empire. That's what I'm calling this. Let's let it open a minute. It's a big old spreadsheet. But then what I would do, if I got 200 called away, here's what I would do. You got to enter it into your spreadsheet. So I've got all the bugs out of the spreadsheet, so I can share this one with you today. Oh, is Ken here today? Ken, this is good. So I shared this in Discord yesterday or this morning, and I wanted to go through to make sure y'all understood. You remember how I had a governor in there, and then all of a sudden I'm not doing the governor? And then I looked at what Lucello said. Lucello said, oh my gosh, I'm being flooded with new money that raised my cash reserves to levels equal to my stock value. I got to slow this thing down. And he said the cure took another year for him to develop, and it's simply this: make your minimum purchase or sale in your algorithm to have to be 10% of your total stock value. He said another way to look at it is this: the amount you insert into your AIM high action column must be at least equal to your safe figure. So last night I sit there and I go, oh God, it's 10:30. Oh gosh, my mind's not working. I just want to go to bed. I'm tired. It's been a rough day. And I got in here and I started working on my algorithm. And can you believe that Bobby Genius has already built that in? I forgot about it. So Ken, we already have a governor built into the thing that doesn't involve my governor that I developed. So I'd already put this in here. And I was sitting there looking at the formula last night. And I go, Bobby, dude, you're a genius. You already got it in here. So there's nothing that I have to add to get that little puppy to go. All right. So in other words, let's show you what that means. In case anybody is show you what the algorithm means. So right now, my actions thing is saying, hey, dude, you need to sell $1,968 worth of stuff. But my safe is $34.68. So safe is equal to 10% of what your current stock value is. So you see my shares to buy or sell is not populated, right? It's not telling me to take any action. Why is it not telling me to take any action? Because, let me show you this. Portfolio control, where's it saying? Da, 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 da. Gosh, I got it in here somewhere. Hold on a second. Yeah, here it is. If Lin A2 greater than 4, blah, 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 that's just saying look for it to be, if you had an option rather than a stock here, right? If you were trading options or leap. But basically what it's saying, if and K2 has to be greater than H2. So your action tab, K2, has to be greater than your safe. That's why it's not telling me to buy or sell shares now. Otherwise, this little thing would be telling me to sell $2,000 worth. Bob, you need to sell $2,000 worth. But Lucello said, hey, it took me a year to develop, but I did this. that the action tab has to be greater than the safe tab, which is 10% of your current stock value. It is currently not that, so I'm not getting a signal. So I just wanted to bring that up to Ken and all the guys so that everybody would realize that we've already got a governor built into this. So it slows it down just a little bit. Let's see. Hide all those again. And if that's like too much for y'all, I understand, because it was driving me nuts going through this. Right. So this shows you now, we started out at 72% stock. Now I'm at 76, and I'm at 24% cash. Just bada bing, bada bing. And more importantly, here's what I look at. And those of you that work, you know, you got a job, you got a life outside of trading, you know, all you got to do is look at this, you know, once per week, once every 2 weeks, once a month, you know, and just stick with it. I kind of look at mine every day, right? I want to see if it's giving me a signal to do something. And you can look at it daily, you can look at it monthly, whatever. And the cool thing is, look, let's say you get to the end of the year and you want to rebalance. I have built this wonderful little rebalance thing over here. Check this out. So if you want to keep it 80% stock at all time, all you got to do is put 80% here and it'll tell you. Now, all of a sudden, let's say you get scared and you're saying, hey, Bob, I don't want to have 80% in TQQ. I want to go down to 50% because I'm nervous all of a sudden. It'll tell you exactly how many shares you should sell. Isn't that cool? I need to hide these since I'm only doing one stock deal. Let's hide those so we don't see those little errors. Let's see. Hide. There we go. Hide this one too. Hide. So this little puppy tells you exactly what to do. You want 40%? It'll tell you based on your current allocation, you got to do that. What if you're like really bullish? You say, hey, Bob, I'm pulling out all the stocks. Let's go 90% of my account into TQQQ. It tells you the exact amount of shares to buy. God, I feel this is awesome. You know, I told my attorney today when we were doing our wheels, and he was talking about assets. I said, but perhaps my greatest asset is not investment accounts that we own. It's not my home. It's not my farm. It's not my farm animals. I said, it's my spreadsheets. My spreadsheets are valuable assets that I share to y'all for absolutely free. So hopefully you'll view it as a major asset to you as well. They're cool to use, right? So if you're running the smart, what am I calling this? Sweet butts. I love that. Running the sweet butts, this is all you need. And I will share this with y'all later today. I promise. All right, so what do I need to do today? Is there anything I need to do? Well, you could roll this if you wanted to. Again, if I'm all of a sudden getting bearish on this, I could say, hey, I'll just wait till tomorrow and let the assignment take place. Or I can, you know, roll this out another week, 2 weeks, a month, whatever I want to do. Collect me a little more money, give me a little, you know, more cash. I mean, this is, to me, man, this is, I wouldn't say free money, but think about it. Selling calls with no risk. Selling calls with no risk. Well, Bobby, you do have risk. You have risk that the stock goes way above your calls, right? I guess. You know, if that's right. But, you know, if I get called away, what am I going to do? I'm going to come back over here and I'm going to sell, you know, maybe a 36, you know, down to 141. What's it trading at 142? You know, you can, where do you want to buy that? Then you can sell you a couple, you know, you want to go 23, 29, maybe here, collect you a couple $100, right? Collect you a little under 200, $172. Roll it out another week. Isn't that cool? And, you know, if you get assigned, if you get put stock, then cool, right? You bought it at a discount at $140. So yeah, like Jason was talking about yesterday, can you run the wheel on this? Absolutely. I just think you're leaving money on the table if you're not selling options against your shares. Right? I like that. I love this. I love being able to do this. So we'll see what happens tomorrow. We'll see if we're going to roll. We'll see if we want to take assignment. And what will that depend on? It'll depend on our market analysis, right? Market analysis right here. Well, I'll be darned. We've got consolidation here, right? It needs to figure out, do I want to stay fairly priced or do I want to go to oversold? Yeah, so right now I'm saying, hey, it's above all three of the moving averages. It looks like everything is just fine on the skew driver. So I'm not entirely bearish. Now let's look at one other thing. Let's look at, where's my thing about you? Where's my trading view? Trading view, trading view, trading view. There we go. I like looking at that too, right? Looking at our charts. See what our charts look like in trading view. Right. AGQ, I don't want that. So let's look at the Qs. Look at the Qs. This is a daily chart, right? And you kind of look at, you know, what's our, I love the linear regression. Look how cool this makes the linear regression, right? So you say, what I'm going to do is I'm going to sell when it gets near the top, and I'm going to buy when it gets. Now, you don't have to time the market that way. You don't have to do that at all. But look how great the linear regression channel just shows us pretty much everything we need to know, right? So you got the 20 and the 50 moving averages in here. You got the 200 moving average, all that. But I just love looking on a daily basis at the NASDAQ and see that, well, look at this. We should have bought there. Probably should have sold or had a sell order up here somewhere. Probably should have bought right here. What are we doing now? Well, we're probably waiting for the thing to go back up to here, right? Up to here. Probably is where it's going. No, we don't know. You do that on SPY too, right? So one of the things I did yesterday is I said, okay, we need to look, make sure that SPY is above the 200 moving average. And I promise you, I'll share an article that did the back research on that and said, hey man, if you're going to do this TQQQ, you're pretty safe if SPY on a daily basis is above its 200-day moving average. Pretty safe to stay in it. If this ever gets down below the 200 moving average, yeah, I don't know, man. That's when the big drops come. That's when the big, you know, the big crashes come. So you might want to lessen your exposure. But look at all the options we have, y'all. Again, you know, if what we expect happens tomorrow and I start getting bearish, let my shares go, you know, and then I sell a put. Where would you sell a put? Well, go back down here. Let's see. Let's get back to our Qs, our TQs. Here's our TQ, right? So where would you sell a put at? You know, pick your poison. Maybe the 128, 130. Sell it anywhere you want, right? If you, I mean, it depends. Do you want assignment or not? You want assignment, you know, you're gonna have to sell it up here. Like we said, 140 and get 87 bucks. You sell it down here, you're not gonna get a lot. But you're probably not gonna get assigned either. So do you want the shares or you don't want the shares, or you just want a little bit of income coming in? Because ultimately we are option sellers, right? We like doing that. So I think this is just a cool little strategy. Cool little strategy. All right, so what should we do today? Let's see. So we've got down to this. What should we do today? Well, let's look. Is there anything to do? This may get boring for all of us. We may not be having tons of orders and putting in orders every day. Well, let's go back to our charts and see what the markets are doing. This is down a bit. This is up. Normally, I make decisions on the E-minis on what I'm going to do. So am I going to do a 1-1-1 trade today? No. Well, let's get us some rules here. Let's develop some rules. Let's do this. This will be good. Let's see what to do on up days and down days in the market. All right, let me get where's my dang pen? Where's my dang little kids? Or my cat that's up here. There it goes, draw some. Draw, Bob, draw. All right, so we got up days and we got down days. We got to figure out what to do. Down days. Okay. Down days are easiest, really. Draw a little line down here. All right, what we're going to do on a down day. Okay, on a down day, we're going to do the 1-1-1 trade. I normally do it in the micros. All right. What is the 1-1-1 trade? Well, you basically do a 50 wide put debit spread, which is bearish, right? And you do the one where you can buy that spread for $10. All right. Then you sell. Okay, so you do that, right? And I normally do 2 or 3 contracts of that. So that's the 1-1. So what's the other one? Then we're going to sell in the same expiration a micro put that is near $20 that we can get $20 for. So this cost us 10. but we're getting a credit of $20 here, which means we're getting an overall credit of $10 for that trade. Isn't that cool? And we love those trades. Gosh, I'm telling you, that has been, and it may never work again, but that's been the biggest trade on the board for me. That trade's working wonderfully, just wonderfully. So you're putting on that entire trade for $10 debit. Well, Bobby, how do you manage that? Well, however you want to manage it. You know, most of mine are profits right now. I could take them off, but they're giving me positive theta. So I don't really want to take them off. I'm just letting them expire. Right now, they're all doing great. I don't see the need to take it off. Now, what you could do is, look at your overall Greeks. Do you want to be more positive? Do you want to be negative? Well, what you do is, let's say that your short put, the single short put that you sell, gets to a 95% profit, and you got 20 days left. And you want your deltas to be negative. Well, close that thing. Take a profit on it.
What's the typical days till expiration on that?
45 days. Nearest to 45 days. That's a sweet little trade. So let's do this. Let's just show you how to set it up, so everybody's clear about the 1-1-1 trade. Let's go over here. All right. And I'm telling you, it's so much easier. If you don't have an account with Tastyworks, what I would advise you to do is set one up and don't put any money in it so that you can use this. It's just real easy to do, real easy to watch. All right, so here we go. We go MES, and this has just been the greatest trade. So we say 41 days, right? Closest to 45. So we'll go here. And what you do is you're going to do a long put vertical. And here you're going to stretch it out 50 wide. Right? So right now that's going for 15. So you want to move that down to where you can get it for $10. Oh, not too far. Is that my cat? I think it's my cat, Bill. All right, so you can do that for $10, right? Well, how many contracts you want? Look at your buying power. I've been putting on, 2 or 3 or 4 contracts doing that. And you'll buy that one. So then the next thing you do, now Tastyworks won't let you do it as one order, and Thinkorswim will. But the next step, so you'll have to do that order first, send that. But if you're in Thinkorswim, then you go down and you sell the one that you can get about $20 for. So that'd be this one right here, the 42. All right, so you sell that option. Oh, what did I do? I got one too many on here. What did I do? Hold on. 1, 42, 50. There's a 50 wide. Who only knows? Clear the order. Here's what you do though. You're selling the one here for $20. So the overall trade will be a $10 credit. So really, really cool trade. Right now, we do those on down days. Now, if you want to get fancy and you want to keep doing you remember how we were doing the daily micro put, right? You want to do that every day? Well, what you could do is sell, well, here's what I would do. If I were going to do the daily micro put, I would sell one on a good down day. So the micros are up today. So I don't, you can keep that going if you want to, or you can abandon that, whatever you want to do, and just do the 1-1-1. But let's say that what you wanted to do today is it's an up day. So it'd probably be a better day if you do the long put vertical, right? So on an up day, if you wanted to leg into them, and you don't have to get fancy with this. I'm just throwing this out here. On an up day, you could do the the debit spread. That's the best time to buy puts, right? And this is a put debit spread. Best time to do that, if you were going to do it in isolation, is on a up day. So you could do this today, right? Move it down to where it's $10, put that on. Then what do? Then you wait for a down day, and then you sell the one that's at $20. Yeah, you don't have to get fancy with it, and there's probably no need to do it. It's probably easier just put it on. I'm just telling you, I'm showing you different ways that you can enter into these. No need to complicate it. Keep it simple, right? The more we complicate it, the worse it is. All right, so that's the 1-1-1 trade. So that's what you do on the 1-1-1 trade. All right, what else do you do on the down days? You sell puts in your Black Swan hedge. In your Black Swan hedge. Well, Bobby, how you do that? Well, again, look at your Greeks, go to your Analyze tab, make sure that you're, you can you can suck them in, but here it basically is this. You go here and you look at your overall deal here, right? You go, okay, let's see. If I get a big down move, we'll go hide simulations. Then we'll go, let's do vol step 4. And let's move that up to 15. Good. So here we are. So this is my portfolio beta weighted. So on a 20% down move, I'm up $78,000 on the entire portfolio, even though I got all that TQQQ, right? So I'm up $78,000. So then I go, well, it's a big down day today. Let's pretend. So can I take on 3 short puts? Well, let's see. So then you go out, past 60 days. You go 72, 93, go 103, wherever. And I want to make sure they're 50 wide. And I'm looking to do the one that's at $3. Now you could do this one, right? You could do the 390 here, right? You could sell the 390s. And we do 3 of those to start our little campaign. So here's what you do. You go analyze this trade. All right, let's analyze this trade. So now change this from this particular expiration to just all ES. And then we're going to go hide position. So we just see the one. Hopefully there's a calendar. Let me take that down. Make sure that's the only one. So what you do is go unclick it there and make sure it goes flat. So that's the only trade you're evaluating. Now you go to show all. Okay. So now on a 20% down move with volatility getting up to 74%, I'm at 32,000. Can I absorb that short 3 put? Yes, I can. I can absolutely do that. So then I would enter that trade to start me a new tranche of the Black Swan hedge. Isn't that cool how you just kind of go, hey man, I just got to make sure that I'm going to survive. I just want to survive a crash. I don't want to be out on the street and losing everything. Will I survive? Yes, you will survive if you do that. Okay. Now, what's another thing you could do? You could say, well, if I couldn't do that, then I've got a working order here to, to basically harvest these 6 shorts that are part of a Black Swan hedge, right, at 20. Well, if I wanted to make things a lot better, and I'm thinking the crash is coming tomorrow, based on the skew driver and based on my analysis, then you could go ahead and buy these back for 35 cents, right? Instead of waiting for 20. It's ideal to wait for 20, but keep in mind, if you need to do this, pay 15 cents for, 6 options. I mean, that's not bad money spent, right? To get your portfolio back in line. So let's see what that would look like. So, where are those 6? Here they are. So see these 6 here? You could take those out, right? You go, how would it look if I harvested those today and sold 3? So then you go, let's take that out. So now instead of being up 30-something thousand, you're up 97,000. Is that worth paying 15 cents for 6 options, which is $7 times 6, what, 42 bucks? Yeah. Y'all see how much flexibility we have this? I mean, it's really open to your imagination. Hey, do you want to be up $32,000 on a 20% crash with selling the new 3? Or heck, let's take those 6 off, and now we're up 97,000. See how easy that is? That's $46 well spent. Well spent. Well, plus commissions, 50 bucks or so, right? So those are the decisions that you get to make with this awesome little program that we got going on here. So if you're going to be up 97,000, even with selling 3 puts on a down day, do you care that TQQ bombs? You don't give a crap. Now, keep in mind, the world's telling you you can't hold it as a long-term investment. Well, I think they're wrong. So you can go with the world or you can go with Bobby. Just don't hold me responsible if you lose everything. Okay? I'm trying to give you the best that I can possibly give you. So let's go back to our little drawing board. So we'll get everything on here. So we know we can do the 1-1-1 trade. We can sell puts on a down day. All kind of things that I'm trying to think. Is there anything else I could do on the down day? So 1-1-1, sell puts in our BSH, probably the 2 best things that we could do with this little to do. Or, if you're going to keep on the, selling a put every day in the MES, well, you could do that, right? 60 DTE put 10 delta in the micros. You do that. It's a strong, high probability trade. So you've got stuff to do on down days. Everybody with me? If I miss something, I think of something else, throw it in there. Throw it in the chat or say a word. All right, it's an update. So what do you do on an update? Well, first thing I do is market's up. That probably means VIX is down. So look at the expirations, 120 to 90 days, 60 days, and we're running our VIX hedge, right? So you look at the 120 days and you take 0.0025 times your net lick to determine how much money you can spend every month on VIX hedges. So you're looking at something that's about 120 days out at a 10 delta. And you're going to buy that amount in calls. So on a $50,000 account, you're probably spending about $100, right? That's what it would end up being, maybe 0.025 times 50, whatever. So you go to 10 delta calls, and maybe you're buying 2, right? And then in another 30 days, these will be down to 90 days. And the next 120 days, and do it on a day when the market is up and the VIX is down. You're going to buy some more, right? Because you're putting on the VIX hedge. So great to put on a VIX hedge as long as we're following our mechanics of the VIX hedge. And if anyone's got questions about that, let me know. We do it every 30 days so that you have, let me show you my VIX positions. I'm trying to go through the whole thing. Aha, who is that calling from? Los Angeles, California. I want to talk to California. Sorry, Jason. All right, so let's look at our VIX hedge. Here we are. We expect to lose on the VIX hedge, but I see, as you see, I have them at the 120, I got them at the 90, I got them at the 60, and I got them at the 30. And I've even got one that's coming off, come off yesterday, right? I lost 100%. We expect to lose on these, right? This is just part of our hedge that we're running. If you don't need this hedge, don't run it. It's going to cost you a maximum of 3% of your yearly portfolio. I think you can do better than 3% with just the upward move of TQQ. All right, so we've got that going. So what else can we do? So we've got VIX hedge. What else do we do on an update? So on an update, you can do a calendar spread. Put calendar spread. Buy, put calendar. So I like to do that when volatility is down here. So it's an update today, right? So let's look at VIX. And let's go to the chart. See this? You buy calendars when the VIX is low. There is no better time to put on a calendar than today. Do y'all see? Now, here's the thing. I put on one here, and I put on one here, and I put on one here. So I was dumb, right? Well, not really. I'm just saying probably there's going to be a chance in the next 30 to 60 days that this thing is going to go swap back up, right? Now, what is your assumption? My assumption is the market is neutral to bullish tomorrow, but what if I'm wrong? Then today's a great day to put on the calendar. All right, well, let's show that. Let me show you how to do that. I like doing it in the SPY. Now, when it's really low like today, you could do it in SPX because, man, today's a great day. It'd be a greater day if the market is up tomorrow and the VIX is even down lower, but we're at 1533. Let's look at the chart. I mean, that's as low as it comes, y'all. Look, I mean, gosh, we're almost down there, right? I guess we could get back to 14 again, but it's a great time to put on the calendar. So let's do that. So let's go to trade. And, for the ones that I layer in and do several of these, then I'm putting it in on SPY. How do you do it? You go 60 days out first, closest to 60 days. So we'll go at 58 days. Do it in SPY. You can do it in the micros. You can do it in the E-minis. You can do it in SPX. Depends on how much you want to invest in this thing. So what do? You find an option that it's a 40% chance of being in the money, and you buy it. Cha-ching, the 444. All right, now we're going to go down to 30 days, and we're going to sell the 444. So if I'm at 58 days, I'm probably going to go in closer to 28 days. So here we are. So I'm going to buy that option there, and then I'm going to sell the 444 here. All right. And this is a calendar. So it's going to cost you $411. How do you manage this? Well, keep in mind, you're looking at the forest first, gives you negative delta and gives you positive theta. Do you want negative delta in your account? Do you want positive theta? So let's see if we can look at what this looks like on curve, and then let's do the analysis. Let's see. Yeah. Let's see. I don't look exactly right. Let's see. How do I fix that? Fix that. Hold on. Video. That looks pretty good, I guess. Showing other, do I have other positions there? It's hard for me to tell. But basically what you're doing is doing this trade where you're getting a little bit, you want the market on one of these calendars to go down a little bit. See that? Here's where the current market is. You want it to go down a little bit, and you want volatility to increase. All right, Bob, well, if you want to manage this as a standalone trade, how would you, or tree in your forest, how would you do it? Normally, I would close this for 10% profit. So if you're paying, $412, you can close it when you get 41, $50 on it. When you got a good down day in the market and volatility spikes, take you 10%. Or look at the Greeks that it's adding to your forest and say, well, I still need that negative delta though. Leave it. Or I still want that positive theta. Leave it. Now, this would cost you probably 10 times as much, $4,000 if you're putting this on in the SPX. But I put on one in the SPX, and apparently my timing is wrong because I'm down $300. But it gives me nice theta, it gives me nice negative delta to round out this, horrifically positive deltas that I've got with my TQs. Questions on the calendar spread. That's what we do on up days. All right, third thing we do on up days is this. On up days, you can buy an entire BSH tranche. Entire BSH. Let's look at that. All right. So if you sit there and you go, oh my gosh, I've done the analysis tab that Bobby shows me, and man, it shows that I'm down $415,000 on a 20% down move. I need some protection, right? I got all these TQs. I need protection. Well, wait for your good up day, like today, and do you a flat swan hedge. Let's see what that looks like. So we do those in the E-minis, right? So let's trade the E-minis. Let's take the curve off, go to the table, analysis off. Well, how do you do that? Well, you're going over 60 days, and you want to find 50 point wide strikes. So let's see what 93 looks like, 93 days out. So you go here, and you're looking for the one that you can sell around $3. Okay, so that's about here, 315, right? And the one below it is a 50 wide strike. Great. So what you would do, and I don't think you can do this as a single order, but you would go, I want 3 of those. We'll sell 3 of those, and then I'm going to buy 5 of these. So I think I got to do that one and make that up to 5. Oh, sorry, 5. Right? So it looks like I don't think they'll let you do this order here. Yeah, strategy not supported. You got to leg in on this. But let's just look at it. So basically what this does, see if it'll let me model it out. Model, analysis, expiration. It doesn't look good, does it? I got to figure this stuff out. Curve, analysis. Well, y'all know what it looks like over here. Let's do it over here. 93 days. Let's go trade. Trade. Yes. So we're going to go 93 days. And go $3, 26. Here, 26.50. Sell 3 of those. Let's make that 3. Hold your control key down. You got to do that on this one, and then buy 5 of these. Buy 5 of these. So if you wanted one tranche of this, it's going to cost you $250 plus commissions. So we're right. Look at me. $264 with commissions. Well, let's analyze the trade. What does that look like? So we'll go right click, analyze your trade, So you guys are playing chess now. You are no longer, so let's go, we'll hide positions to see what this gives me. Hide positions, so it just shows the simulations. All right, so we're gonna go, let's do single symbol. So we'll only show ES stuff. And see, this shows just that expiration. So change this to ES. All right, so we've got to take this single out. So we'll just have our little 3x5, and that looks right. Let me click it off to go to 0. Here we go. So let's see how this looks. So here's your 3.5 that cost you $250. So now all of a sudden you go, okay, just this trade, if it gets down 20%, you make $25,000. Was that $250 well spent? I'd say so, right? Well, how does that fit in with your entire black swan hedge? So then you would go, so hide positions, you go show all. And it shows you all your, well, it should. I check that one. Look at those. Everything on there. Now we've got everything on there. So now let's look how our little shamonkey's doing, down 20%. Now you're up 174,000. Now you have built yourself some mighty dang good downside protection. You don't give a crap what happens to, let's go to our portfolio. What if TQQ and everything goes down, Bob? You don't care because you're still up 104,000. Okay, so up days, you can do calendar spreads, you can add to your VIX hedge, you can calendar we talked about, you can buy an entire tranche of the BSH. You know, on up days, let's say the TQQs are up and you haven't sold a covered call against it, right? That's a great day for you to sell your covered calls, is on an up day, right? Sell your covered calls. Let's say you want to enter into your black swan hedge, you know, in a Frankenstein manner, like I did before. Well, the best day to buy puts is on an up day. So if you're selling calls, best day to buy puts is on an up day. Let's say you want to buy an ES put. Best day to do it is on an up day. Same thing over here. On down days, that's the best day to sell puts, right? So we said if you want to do the 60 DTE daily micro, well, just wait till a good down day to do it. You know, great day to sell puts here. So if it's a great day to sell puts, heck, let's say you wanted to do a leap or something on something, TQs or anything. It's a great day to buy calls on updates. So now you've got you got some rules here, right? So you go, hey, wait a minute, mark it down. Let's put on 111. Hey, mark it down. Let's sell a 60 DTE micro put. Hey, it's down. I need to start my next tranche of my black swan hedge. Well, sell you 3 here, right? Great time to do it. Then put in your order to buy your 5 and let, you know, theta decay happen and the options decay, and you'll buy your 5 back at a better price. How do you know? Well, if you sell something for, let's say we've got a great little spreadsheet that tells us the whole deal, right? I built this for you. Some of you are new and hadn't seen this. So we go to, I got a break-even calculator. So let's say that you're doing 1 tranche of the black swan hedge and you're able to sell your shorts for 320. Well, the normal rule is we're going to harvest those at 20%. So then you put a GTC order in to buy your longs. Well, what do you put it in for? I put them in for like, you know, $1.50 to buy my longs. So that entire trade without a crash is going to make me $54.98. So say you're like, hey, Bobby, I don't want to wait that long. What's the maximum I could pay to have this entire trade work out as a break even? Well, then you can do some fancy stuff, right? We'll do data. We'll do what if analysis. We'll do goal seek. So set sell K2 to a value of 0 so that this overall trade results in, you know, nothing. I mean, you're putting on the trade basically for nothing. Doesn't cost you anything. By changing sell F2 and hit OK, and this will show you exactly the price that you need to buy your loans at. So let's say you sold your 3, then you immediately put a GTC to buy 5 options below 50 points below the ones that you sold, buy 5 of them, and you do it for a price of $1.72. Isn't that cool? It tells you exactly, the little spreadsheet tells you exactly what to do so that you get that as early as possible and that your hedge doesn't cost you anything. Isn't that cool that we found a way to have fire insurance on our home without paying for it? Wow. Look at us. Well, I give props to who developed it. It wasn't me. Now, developing the calendar, doing this and all this stuff, this was me, right? I come up with all this stuff. But Ron Bertino has graced us with some wonderful education that allows us to make those decisions. I think this was a good session, y'all. Questions, comments? A lot today. Good to see everybody today. Where's Stacy at? Stacy not with us today? Dwayne, Jim, MRP, Rod, Drew, Laurent, Ken, Enrico. Enrico, you're new. I hope this is good for you. I hope you're liking everything. Laurent, Drew. Good to see everybody. Okay, good, Rod. Good, Enrico. Glad y'all are enjoying it. What are the inputs we need to enter in the AIM spreadsheet? Okay, the inputs enter in the AIM spreadsheet. Let's look at that. So if you're going to start the TQQ AIM Empire with me, and I'll show you this today, all you got to do is like, tell me how much money that you want to put into it, right? So what you would do is you go to your AIM net lick and go, okay, on 10/15, I'm going to put 45,000 into it and then put contributions withdrawal. So look, whatever your account balance is, you know, say I'm going to put 45,000 into it, you know, and then put the contribution here. Then, you know, once a week, I'd update this, you know, your net lick, what it is in your account. So then you're going to do this. You're going to take your account value. So let's say it's 45,000. Okay, so then you got to decide, are you going to be crazy like me and put 80% into TQQ? Yep, I'm on meeting. So are you going to do that? Or are you going to do 50%? Well, let's say you're crazy like me and you go, I'm going to put 80% of my account into TQQQ. So you go times 0.8, you get this, right? So 36,000. Okay, so if I'm putting 36,000 into TQQQ, divide that by the current price, 142.65 of TQs. All right, so you need to buy 252 or 253 shares. So go do that. Go buy them. Then you're going to go over to AIM activity. So all of this automatically populates, right? I'll share this with you today. So then you go over here and you go, okay, I'm going to do 2QQQ. I'm going to buy, what did it say, 252 shares. Your trade date is 10/20/21. And then I forget what the price was, 142.85 or something. So put in the trade price that you get. And then you're going to have to, it'll ask you, is this new capital? Are you rebalancing or a new underlying? And you're going to put yes. Okay. And that makes everything clear. Now, let's say that this is your second trade that the AIM dashboard says buy, 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 or sell, sell, sell. Then you're going to go over here and you're going to put your trade in. And let's say you're selling 20 shares. Then you go minus 20. It tells you sell 20, right? And then when it says new capital, rebalancing, or new underlying, you always put no. And that is very important to know when to put yes and when to put no. If it's your first starting out and you're just doing it, you put yes. If it's your yearly rebalancing at the end of December and you're going to the rebalancing tab and you're putting that in, you need to put yes. Otherwise, if it's the algorithm telling you what to do, then it's no. That's really, really important. And that's all you do. And then you save it and you close it. And then this little thing will tell you how much of your money's in stock and how much is in cash. And it'll keep up with your 70% stock, you know, your 30% cash, you know, whatever. Let me get all that out of there because it's crazy. But I got all the formulas in there for you. So that's all you got to do. That is it. I mean, yeah, that's simple, right? Let's see, questions on that? want to listen to it carefully once you post it on YouTube. Yeah, you know, you can go slow, you can watch it over and over. And I apologize, I've been working on the spreadsheet so much that I just hadn't had time to post our, you know, I think we've had 3 great sessions this week. Right. But that's all you got to do. Do your net leg, do your aim activity when you do it, and then go, you know, set it and forget it. You know, now, if you're going to do the options trades around it like I'm doing, you know, then, you know, do your options trades. You don't have to enter them anywhere here or do anything. You can keep up with your black swan hedge. We've got a place to do that, even though I'm way behind on that. But I think we've got enough to where you could just do this and not worry about entering everything else if you don't want to. And then just run your program. You know, look at your deltas every day, SPY weighted. You look good, pretty good? You know, are you happy with being slightly positive with good positive theta and good Vega? Gosh, can you imagine? That Vega is just insane. Insane. Awesome. All right. Good session today. Hope you have a wonderful day, and I will see y'all tomorrow.